Hey everyone, before we do the market rundown, just want to remind people that we've got our free course posted about it on social media, but if you missed it, I'll put the link in the description of this video or in the comments. It's a free course, Introduction to Technical Analysis. It's targeted towards people just getting their foot in the door or perhaps some skeptics of technical analysis, and it's free, no credit card, no nothing. Sign up, take the course, win. Let's go. So we're going to look at commodities in a different video today, as I'm going to do gold as well, as partner Jason is on the road. So SPY had a gap up open, and then 15 minutes into the trading day, or before 15 minutes, Trump put out a tweet that said he's meeting with the president of China at the G20 summit. That's towards the end of the month here in June. That pretty much sets the tone to be a bullish environment, in my opinion, until the end of June. And then we had other word come out that the president said that he looks forward to potentially making a deal or progress on the trade war. So the narrative right now is bullish. The market can start to get a little excited for the potential of a deal as we get closer to the end of June. If the market is going up in reaction to FOMC, let's just play it out. FOMC tomorrow, 2 p.m. Eastern. Let's say we get a bullish reaction to the market in the FOMC. We're seeing SPY all-time highs. I could anticipate a bullish environment leading into the G20 and then perhaps some profit taking right before, anticipating the potential that negative headlines can come out again now. So pretty much right now, the likelihood of negative China-Trump trade war headlines is low until the G20 summit. So that creates a bit of a bullish environment where bulls can have a little bit less negative headline risk overnight. So SPY today saw a big reaction to Trump's tweet about the meeting. And at the end of the day, we were consolidating. So we have our high of the bull move, low of consolidation, low bear volume, just looking for an hourly higher low to form. Didn't see any continuation, but also didn't break down and see any real bearish reaction. So we have a very tight 15-minute range as we head into tomorrow. And not expecting fireworks tomorrow until 2 p.m. Eastern. And I wasn't expecting fireworks today, but Trump certainly, I mean, his timing is right on. After this very healthy daily consolidation that we've been looking at on SPY, Trump nailed the timing as far as looking for a clear break higher. The market was ready for it because the bears didn't prove anything for 4 days in a row. And it was a stable environment, patiently waiting for the FOMC, and then he came in and changed that. So if we see a bear break of the hourly, consolidation low, then it's just going to be some profit taking before the FOMC, and I wouldn't be surprised to see that because, again, how much bullish action we've seen in the last couple of weeks, taking a little bit of profit off the table, a little bit of risk off the table. I would expect some traders and investors to do that. If we get a bearish reaction to the FOMC, I'm looking down at the low of this consolidation, 287.82. That's the most important support level for me, because if that level were to break, we would then be losing the daily uptrend, and we would zoom out to the weekly and need to form a weekly higher low. IWM, bull move today as well. We were real tight on the daily time frame. What does hourly consolidation look like? Healthy, no red flags. So the low of hourly consolidation will be a support level to be watching into tomorrow, depending on whether or not we see the bulls holding that with where we're going to open as far as extended hours trading goes. And of course, the highs will be key resistance. And if IWM has a bullish reaction to the FOMC, we're looking up at 161.11. And if not, we're looking at the daily lows, or the daily uptrend, the daily higher lows. 151.67, the most recent one. QQQ, very similar to SPY, hourly time frame, healthy consolidation, and sideways into the end of the day. 186.22 is support. It actually looks like we broke that by 2 pennies, 4 pennies. 186.18 is the level. So 186.18, we know the high of today is key resistance. The last daily higher low is 181.94 if we get a bearish reaction to the FOMC. If it's a bullish reaction, the bulls are eyeing all-time highs. A bunch of resistance in the 191s, and certainly a clear zone that the bulls will have to have a good amount of momentum to get through. XLF bulls showed up today with a bullish engulfing candlestick on high volume. So XLF was the reason for the pullback and weakness yesterday, and XLF, aside from the semiconductors responded really well to Trump's tweet because they've been hit the hardest during the China trade war narrative, but the financial sector saw the second biggest reaction to that tweet. They weren't showing a whole lot of strength in the first 10 minutes of trading, and that changed. So XLF, our daily support, is going to be 26.93 and resistance 27.61, followed by 27.89, and then we're looking back up at the recent highs as well. XLV, bull break after very healthy sideways trading, and XLV now is taking out a lot of resistance levels. Let's look longer term And it's actually a monthly. Let's see what this monthly chart looks like. So all-time high, low of the pullback. Let's make sure that's the case. All-time high, low of the pullback. Lower high is 93.45. Higher low of 92.45. And we're coming up to this resistance. And if we break 93.45, that is a very clear bull break of this tightening range. If we reject, we stay tightening for another however long. So that's going to be a key resistance to be watching. Anything on the daily time frame, most important support level for me is 90.90 for that little higher low. Biotech sector, continuation. Most important resistance short term is 87.87. You can see the lack of clear resistance above that level, but we rejected today, and that was a resistance level to be watching as we knew the bulls were very overextended with this 2-day move. Traded sideways on the hourly, so short-term support is going to be 86.51 for the bulls to try and keep full control. With a bullish reaction to the FOMC, we're going to be making a clear bull break into a range with a lack of resistance. And with a bearish reaction, bulls have a lot of space to form a daily higher low compared to 81.45. And last, the VIX. Green day today, or at least it's a red day, but we closed higher than where we opened. But still just nothing going on. 1440 is the level. It's still holding, but we'll see if we get a spike, perhaps with some FOMC volatility. But otherwise, we are seeing a lot of snoozing and boring action in the VIX. So we'll do commodities. Oil had a very big day today for the bulls. We'll check out natural gas weakness. We'll check out dollar strength and gold strength at the same time. And it's going to have some big implications, this FOMC, because gold is on the verge of a very clear multiple year monthly equilibrium. It already broke bullish one level. We certainly want to break multiple levels to have conviction with this follow through. But this could be very key for both bull miners, which have seen significant runs in the recent past within the last couple of years. I think some of those leveraged ETFs ran 700%. So pay attention to gold, and I'll cover that in the next video. Have a good day.